Welcome to the Ontario Mortgage and Real Estate Insights podcast, your go-to source for the latest developments, trends, and regulatory changes in the industry. I'm your host, Steve Hamoan, here to provide you with insights sourced from reputable news outlets to help you stay informed and make well-informed decisions.
This podcast is brought to you by Real Approved Inc., a trusted mortgage brokerage dedicated to helping Canadians achieve their homeownership dreams. Visit realapproved.ca to learn more about how our experienced team can assist you with your mortgage needs. Let's dive into today's episode.
Today, we're starting with some significant news in the Ontario real estate world. About 2,400 real estate agents are finding themselves out of work after iPro Realty Limited was ordered to close due to a substantial financial shortfall.
It's a tough situation for those agents, Steve. I can only imagine the stress and uncertainty they're feeling right now, especially in a market that's been quite challenging already.
Absolutely, Janine. The Real Estate Council of Ontario, which regulates agents and brokerages across the province, found a serious breach of financial responsibilities. This is not just a small oversight, it was a significant issue that led to this drastic measure.
And with iPro Realty Limited having 17 locations across the Greater Toronto Area and Southern Ontario, the impact is widespread. Communities in Toronto, Mississauga, and even smaller towns like Orangeville and Georgetown are affected. It's a ripple effect that will take some time to recover from.
For those impacted, the advice from RECO is to contact their real estate agent directly if they're in the middle of a transaction. Agents with outstanding commissions should file an insurance claim. It's critical that these agents and their clients know the steps they need to take to protect their interests.
Yes, it's essential for everyone involved to stay informed and proactive. It's a reminder of how important financial oversight and transparency are in maintaining trust within the real estate industry. Hopefully, these agents can find new opportunities soon.
This situation also underscores the importance of choosing a reputable and financially sound brokerage. For clients, it's a wake-up call to do due diligence when selecting an agent or brokerage to work with. It's about ensuring that your investments and transactions are secure.
Exactly, Steve. And for the agents, it's a time to reflect on the importance of aligning with firms that prioritize compliance and financial health. It's not just about their livelihood, but also about the trust they build with their clients. We're turning our attention now to the latest findings from the Financial Services Regulatory Authority of Ontario, which reported a decline in private mortgage lending in Ontario for 2024. Even as overall mortgage activity saw a modest increase, private lending contracted. It's an interesting development in the context of Ontario's evolving mortgage landscape.
That's right, Janine. The report shows a 5.6% drop in the number of private residential mortgages, down to 65,233, and a 3.7% decrease in total dollar value to $32 billion from 2023. Meanwhile, traditional lenders increased their share, with the number of mortgages rising to 348,849 in 2024 from 341,133 the previous year.
Despite this decline, private mortgages still hold a significant place in the market, especially for borrowers who may not meet the criteria for traditional credit. The Financial Services Regulatory Authority emphasized that private lending carries higher risks, such as shorter loan terms, higher fees, and limited refinancing options. These factors can make it challenging for borrowers to transition back to traditional financing.
Exactly. And FSRA's Executive Vice President of Market Conduct, Antoinette Leung, pointed out that private lending is crucial for those who can't access traditional financing. However, she also stressed the need for borrowers and lenders to be aware of the risks involved and receive appropriate guidance from licensed mortgage professionals.
The report also highlighted regional variations. In the Greater Toronto Area, private mortgages accounted for 17.3% of all mortgages, while the Central Region saw 15.7%. The Southwest Region and the Greater Toronto Area recorded the highest shares in terms of loan value, at 13.2% and 13.1% respectively.
Those regional differences are telling, Janine. They reflect the varying dynamics across Ontario's real estate markets. Interestingly, the report also noted an increase in mortgage delinquencies among non-bank lenders, which rose to 0.20% in the third quarter of 2024 from 0.14% 2 years earlier. Mortgage investment entities saw even sharper increases in delinquency rates, jumping to 1.22% from 0.76% over the same period.
It's a concerning trend, Steve, and it underscores the importance of understanding the risks associated with private mortgage investments. FSRA cautioned that these investments carry risks like default, low liquidity, and fraud, which could lead to partial or full loss of principal for investors. It's a reminder for investors to be diligent and informed when considering private mortgage options.
Certainly, Janine. Overall, Ontario's mortgage market reached 414,082 loans worth $256 billion in 2024, marking a 0.9% increase in the number of loans and a 2.4% increase in value from 2023. This growth coincided with 5 Bank of Canada rate cuts throughout the year, reducing the overnight rate from 5% in April to 3.25% by December.
And the Financial Services Regulatory Authority plans to keep private mortgage brokering as a focus in its 2024 to 2025 supervision plan. They also conducted a consumer education campaign to raise awareness about the costs and risks of private mortgages and the importance of planning an exit strategy. It's a proactive step to ensure consumers are making informed decisions.
Next up, we're discussing the recent report by RBC economists on the concerning drop in housing starts in Ontario. According to RBC Assistant Chief Economist Robert Hogue, this slowdown could have dire consequences by 2026. It's a stark warning that highlights the potential for severe affordability issues if the trend continues.
That's right, Steve. The Canada Mortgage and Housing Corporation recently reported an increase in the national seasonally adjusted annual rate of housing starts by 4% in July. However, this isn't the full picture, especially for Ontario. The increase reflects past investment decisions rather than current or future trends.
Exactly, Janine. While the national numbers might seem positive, Ontario is facing a steep decline, particularly in the Greater Toronto Area. RBC's report notes a 24% drop in housing starts in Ontario from July last year, which is quite significant. This decline could exacerbate affordability problems, making it even tougher for people to find affordable homes.
And with the high development and building costs in Ontario, it's becoming increasingly difficult to initiate new projects. Builders are facing rising expenses for land, labor, and materials, which are compounded by municipal development charges. These costs make it challenging to bring new housing projects to market at prices that prospective buyers can afford.
Ontario's 6-month average of housing starts has fallen to the lowest level in a decade. This trend is concerning, especially when considering the provincial government's ambitious goal of building 1.5 million new homes over the next 10 years. If this trend continues, it could widen the housing supply gap and worsen the affordability crisis.
Exactly, Steve. The report also highlights the issue of supply overload in Ontario, which makes new inventory less attractive compared to resale options. The lower price point and high availability of resale homes are appealing to buyers, further stalling new construction.
Another factor affecting housing starts is the decreasing investor interest in pre-construction condos. The Bank of Canada's previous interest rate hikes, coupled with a cooling rental market and declining condo prices, have deterred investors. Without investor confidence, many projects can't get off the ground, leading to fewer new constructions.
And it's not just about the costs, Steve. Ontario municipalities are issuing more building permits than builders are acting on, leading to a bottleneck. Development charges often prevent projects from being financially viable, which is a significant hurdle for builders.
The report suggests that if Ontario's housing construction pipeline isn't addressed, it could taper out by 2026. Any significant drop in completions could make it even harder to close the housing supply gap, especially if there's a rebound in population growth due to adjusted immigration policies.
It's a complex situation, Steve. The potential construction cliff could happen sooner than expected, impacting not just the market, but also the communities that rely on affordable housing. It's crucial for policymakers, builders, and investors to work together to find solutions that address these challenges. Let's talk about an inspiring partnership that's making waves in the mortgage industry. Mortgage Professionals Canada has joined forces with Habitat for Humanity Canada in a commendable effort to address housing affordability challenges.
That's right, Janine. This collaboration is not just about financial contributions. Mortgage Professionals Canada has pledged $100,000 and is also organizing volunteer support to build 10 homes across Canada. It's a significant move to make a tangible impact in the communities they serve.
It's wonderful to see the industry coming together for such a meaningful cause. Maxime Stenser, the incoming board chair of Mortgage Professionals Canada, emphasized the importance of community and how Habitat for Humanity exemplifies that spirit. It's about people from all walks of life uniting to help those in need.
The decision to partner with Habitat for Humanity aligns perfectly with both organizations' missions. They're focused on affordable home ownership, which is a critical issue in Canada. This partnership is a strategic way for mortgage brokers to enhance their community involvement and visibility.
Maxime Stenser also mentioned that the search for a nonprofit partner was guided by the need for national reach and shared values. Habitat for Humanity fits the bill perfectly, as it has a strong presence across all provinces, making it an ideal partner for Mortgage Professionals Canada.
And Pedro Barada, the president and CEO of Habitat for Humanity Canada, highlighted the organization's mission to provide opportunities for Canadians to purchase their first home. They focus on helping individuals and families who struggle with down payments and other barriers to home ownership.
It's heartening to hear that Habitat for Humanity goes beyond just building homes. They work to reduce purchasing costs and even eliminate down payment requirements through creative strategies like acquiring affordable land and utilizing volunteers.
The economic and social impacts of their work are significant. A study with Deloitte Canada found that Habitat homeowners experienced improvements in mental and physical health, employment, and even school performance for their children. It's a comprehensive approach to strengthening communities.
It really is, Steve. And the partnership with Mortgage Professionals Canada is not only about building homes, but also raising awareness about the importance of affordable housing solutions. Shala Habib from Habitat Canada mentioned the positive feedback from mortgage professionals eager to contribute.
It's encouraging to see the mortgage industry stepping up in such a big way. This partnership not only helps provide homes, but also boosts the visibility of Habitat for Humanity's efforts nationwide. It's a win-win for everyone involved. As we wrap up today's episode, let's delve into a recent survey from TD Bank Group that sheds light on the current mindset of Canadians regarding interest rates and mortgages. It's an intriguing snapshot of how people are navigating the ever-changing economic landscape.
Absolutely, Steve. The survey conducted by the Harris Poll Canada reveals that Canadians are quite divided on what they expect for interest rates. With the Bank of Canada holding rates steady, opinions are split. 32% anticipate a rise, 27% foresee a decline, and 29% believe they'll remain unchanged.
It's a clear indication of the uncertainty that's permeating the market. Patrick Smith, Vice President of Product Management at TD, emphasized the importance of expert advice in helping Canadians make informed mortgage decisions. It's about aligning choices with personal needs and long-term goals.
And it's not just interest rates that are influencing decisions. The survey highlights how economic pressures like tariffs are prompting nearly 1/3 of Canadians to reassess their mortgage strategies. Tariffs have affected borrowing capacity for 31% of respondents, while 28% reconsidered taking out a mortgage altogether.
That's a significant impact, Janine. Tariffs are also influencing lender choices for 28% of Canadians surveyed. Affordability continues to be a major challenge, with more than a quarter unsure of how to improve their situation, and 23% facing unexpected costs during the mortgage process.
Despite these challenges, The survey underscores the trust Canadians place in expert advice, with 88% valuing access to professional guidance. It's a testament to the critical role that personalized support plays in navigating these complex conditions.
The survey's findings, which included responses from 942 homeowners and 223 potential buyers, paint a picture of a market that's grappling with uncertainty but still sees the value in expert guidance. It's a reminder of the importance of staying informed and seeking professional help when needed.
It's been an insightful discussion, Steve. As we conclude this episode, it's clear that the mortgage landscape is as dynamic as ever, with Canadians facing both challenges and opportunities. The key takeaway is the enduring importance of informed decision-making with the support of trusted experts.
Thanks for tuning in to another episode of the Ontario Mortgage and Real Estate Insights podcast. We hope you found today's insights valuable as you navigate the world of mortgages and real estate.
Before you go, a quick reminder. Real Approved is here to make your mortgage journey smoother. Whether you're buying your first home or refinancing, their experienced team is ready to guide you with personalized support every step of the way. Visit realapproved.ca to get started and take the next step toward achieving your homeownership goals. Catch you next time and stay informed with the latest industry insights.